get to opening bell time for the latest from the floor of the New York Stock Exchange. I'm so happy to have Rebecca Walser back with me, President Walser Wealth Management. We've been talking for years. You always note the ups and downs and even the international story that, you always keep an eye on. Tell me how you're feeling now after yesterday's Fed call and a lot of folks waiting on a Santa Claus rally.
Yeah, I do think that it's accommodative. So accommodation means that it's definitely better for equities. It's definitely better for small caps. It's, so everyone's talking about maybe 2026 is the year of the small cap. So I don't know, Nicole, we'll see. But definitely what we saw yesterday was a divided Fed. And we even have some silent dissenters, meaning that what was publicly on record, it was actually worse when they looked at the actual notes and saw how people voted that weren't on the actual committee and weren't voting. They actually were more in dissent. So it looks like the actual Fed presidents are a lot more like hold the rate steady as opposed to the ones that are actually governors and nominated by, political parties. So you've got presidents nominating the board of governors and what have you. So really what we're going to see, and it's not so great news for Trump and for what he's wanting to accomplish, Nicole, which is when he appoints a new president next May, he wants to know they're going to be able to cut rates. And right now what we're seeing is a very, very divided Fed. And I haven't seen the Fed like this in 10 years. And I don't know if you track.
Yeah, you're right.
I don't know if you track the actual Fed CME watch tool, but I have never seen it flip from no cut, a most probability of no cuts. We were at like 44% of a cut to a 90% probability we're going to get a cut. That doesn't happen in a 6-week period normally.
And at one point it dropped down to like 20%.
Right.
It was high, then it went low, then it came back up. It was very interesting.
It does not happen. So it shows some instability, and that's going to be concern for the markets as well.
Yeah, you make a good point with that. When we think about where we are now, some of the projections were decent in like GDP growth, for example.
Absolutely.
Is this a buy, sell, or hold opportunity?
So I think for the accommodative, as long as we get accommodation, I think equities will continue to run. Cheap credit means cheap R&D, means cheap AI investment. We are seeing some pushback this morning in the markets against Oracle, and specifically the fact that they are leveraging debt. We had before the Oracle AI play with OpenAI, we really had all of these mega, our Mag 7 really hyperscalers doing business all with free cash flow, Nicole, which is a complete difference to dealing with free cash flow versus actually debt financing. So I do think we're getting some pushback now as to the debt financing, and we need to be fiscally constrained. This is a very big play, the largest in the history of time. It will end up being the largest economic transition in the history of time, according to my opinion. And I think that is going to be some back and forth. So we do have to be cautious on that.
Okay, so when we look at the opportunities here, you have a few names that you brought to us, but there was a lot of talk, even from Chair Powell yesterday, even about the big, beautiful bill. And a lot of the people who come on think that there is going to be fiscal stimulus coupled with monetary stimulus, which could be good news. Yeah,
absolutely. I mean, anytime you are spending money, you are stimulating the economy. So from an economic perspective, stimulus is positive. It's positive for equities. I don't necessarily know that translates into the bond market, because the bond markets react to risk. And the more accommodative you are, the more you're devaluing your currency by printing. We've stopped quantitative tightening. We've moved back into the sphere of quantitative easing. The Fed pumped billions of dollars in the last 6 weeks into our economy. So we are already shifting to accommodation. And Nicole, if we aren't seeing stock market highs, if we aren't seeing rallies, then we've got even bigger problems, because that means the bond market is reacting and saying, oh, the risk that's getting priced in here is too much and we have to raise yields. And you do see the 10-year, it dropped at one point in the last 6 weeks below 4%. It's back up to over 4.1.
So like 398.
You can see that we are starting to price in more risk.
Okay, let's get to some of the names that you like today. We're looking at ticker LIN.
Yep.
This stock is up 1.5% today. Why did this name jump out at you?
Well, really, they are a market mover. And I would say this is almost turning into a value stock. They have 33 years of increased dividend growth. So that is a really value play. But they're 20% off their all-time high. Their CEO just bought $1 million of shares this week, which is always a little bit
always a good sign,
sign, right? When the CEOs are selling, we're a little bit like, And they're really, their revenue generation is growing. So we think that this could be more of a value play, but they're in the gas and space of engineering. So they're basically a gas engineering entity. which is great for energy.
You also had Visa on there.
Yeah,
Why Visa?
yeah. So Visa is. I take a note, put it down. Visa is a textbook case. I believe it will be a business school case of traditional finance moving to the blockchain. JP Morgan just named them as their payment processor of choice because they are implementing all kinds of things with stable coins and tokenization. And so when you have a traditional finance company like this moving to the future ahead of its predecessors and everyone else around it, we feel like Visa is positioning itself to still be a player in the new blockchain currency that's coming. And if you're a traditional finance player, you have to make this move. And so we're really big on Visa. They are off 12.5% of their all-time high, and they have 17 years of dividend growth, strong free cash flow. Free cash flow is over 50%. So we believe that Visa is on the right track.
So I have 3 quick questions for you, and you can say pass if you want. It's going to be AI revolution. What happens to Warner Brothers, and is Oracle a buying opportunity? And quickly, AI revolution, where are we?
We're at the beginning stages. It's just begun, and it's starting to monetize.
How do you feel about the Warner Brothers Discovery battle?
I feel that it's capitalism at its best, and I love it. I love it.
And last
keep
but
it
not
going.
least, Oracle's down 14%. Your thoughts?
Yeah, it's the debt. It's them using debt and not having the revenue.
Not necessarily.
I think
you want to wait.
I would not. I would pause on Oracle for now for myself. Yeah, for us.
Good to see you.
Good to see you, Nicole.
Walser. I'm so happy to see her. And Merry Christmas to you as well and to your family, Rebecca. Rebecca Walser, Walser Wealth Management.